What's up everybody? Welcome to the Stocks channel. My name is Cory and this is going to be your daily stock market update. Please remember to smash that like button and subscribe to the channel. And first up, we're going to take a look at the S&P 500. So let's crack open this chart and see what's going on in the stock market today. Alright, with today's price action on the SPY ETF, we did close up higher 0.34%. And we did break out of our resistance trend line. So we're starting to trend back into the bullish direction, and that short-term bullish trend is now picking momentum back up because that 5 EMA is starting to slope to the upside and it's starting to create more separation with that 13 EMA. Don't forget, we still have that strong term medium bull trend because we know that 20 simple moving average is still aggressively sloping to the upside. So now that we've broken out of our resistance trend line, we're looking up towards our price targets at $350. If we can break 350, our next level is still $355, and it looks like we're going to get to 350 very quickly here. Now remember, when we get up to the 355 level, we do have some very important resistance trend lines that we have to remember acted as very critical resistance in the past and did lead to large corrections. However, this time could be different, and if we break through these resistance levels and we can come back and test them as support and bounce, we could start heading higher and we could start into another very important bull cycle on the S&P 500. So we really need to wait and watch those levels and see how the price action is going to act when we get to that level. But right now, the 350s are our price targets, and we want to keep a close eye on those levels because those will be our profit taking levels. If we go up to those levels and we start trending down and finding resistance, we want to go ahead and take profits because we know these can be very critical resistance levels that could lead to a steep correction. So while we're bullish on this market, we do recognize the risk and we recognize the fact that we're going into a very strong resistance area, and we want to take our profits if we start getting rejected at those resistance levels. Now we'll always have another opportunity to buy back in, and we'll always find support and see a bounce if the trend is going to remain bullish. So right now we're going to take advantage of this bullish trend, and we were buying off of this support level at 341 because it was the critical 0.382 Fibonacci retracement level, and we were finding support there for 2 days and continued to bounce. And now the 20 simple moving average has now broken above that level, and we're also finding support at the 20 simple moving average. So the bulls did everything they needed to do, and they kept the price action above the support levels, and now the bulls are ready to start running. So the price action and the trends are still very bullish on the S&P 500, and it looks like that correction is finally coming to an end. Now there's still a lot of volatility in this market, and the US election is still coming up. So I wouldn't expect to see just smooth sailing to the upside. We could still see 1 to 2 day pullbacks in between. But as long as we have the bullish price action and the bullish trend, we want to remain buyers of the dip off of these support levels. So we did get that price action close back above the 5 EMA. So we're getting all the bullish signs we need to know that we're likely to hit our price targets. So keep in mind, the first price target is that $350 range. And we'll know that the bullish trend is reversing if we start to see the 5 EMA cross below the 13 and the price action starts closing below the 20 simple moving average. So right now we're going to remain bullish until we see something start to shift in the trend and the price action. Next up, let's take a look at the Nasdaq 100, and this is the QQQ ETF, and we see the Nasdaq 100 is still in that tight consolidation range, and we're closing right around the 13 EMA. The short-term bull trend is weakening, but it's still there with that 5 EMA just above the 13 EMA. The price action still closing above that 20 simple moving average, and we're still finding support at the 0.382 Fibonacci level of $283. So if you're a Nasdaq 100 bull, you want to see the price action continue to close above 283, and we have yet to break our resistance trend line on the Nasdaq 100. So a break and close above $287 will start the Nasdaq 100 bulls back into action, and that will set us towards our price targets of $296. And if we can break that, we're testing the previous all-time high at $302. So the Nasdaq bulls are not quite caught up with the S&P 500 bulls, and they still have some work to do, but they still do have the benefit of a bullish trend and bullish price action. As long as the bulls can trade above 283 and they can break this resistance trend line, they should have no trouble getting to that 296 price target level. Next up is the Dow Jones Industrial, and this is the DIA ETF, and we see the price action closing right on the 5 EMA, and we're still maintaining that short-term bullish trend. We have the medium-term bullish trend still finding support at the 20 simple moving average, and that 20 simple moving average is still positively sloping to the upside. On the Dow, we did come down to the 0.382 Fibonacci retracement at 280 and did find support, and we continue to get price action closes in the bullish direction. So on the Dow Jones, we're looking for a break above resistance and a price target of $288. And we do have a resistance trend line at $291 that we need to break to get to our next price target of $292. So right now, all three indices are looking bullish, but the strongest index looks like it's the S&P 500 and the Dow Jones looks like it's in second place. The Nasdaq 100 still has some work to do to catch up, but it does still have a bullish trend and the bulls could step in soon to start driving the Nasdaq higher. So one thing to note on our bear bull survey for the week is we do have 33% bearishness, which is still a downtrend. So that's a minus 2.7% drop from last week, and the historical average for bears is 30.5%. So we still do have enough bears on the sidelines to continue to help drive this market higher, but we are getting close to the historical average for bulls at 38%. And we're at 35.7% bullishness. So that's a 1% increase from last week. So there's still bears on the sidelines and there's still cash on the sidelines that can help drive this market higher. And we're not likely to see a lot of big money shorting coming in when there's this many bears that have cash on the sidelines. So the survey goes in line with what we believe right here on the Stocks channel, that if we have too much bearishness, we're likely to continue to grind higher. And that's what we're seeing right now on the indices after that little correction that we had, is we're starting to see price action and trending go back to the bull side. So in another week from now, I would expect to see more bulls, and eventually once we have too many people bullish, we'll know we're probably near a market top and we need to have some significant correction. But the survey showing there's still time for the bulls to continue to run the price higher. So next up, let's drop in on the VIX and see what's going on with our fear indicator. And we see the VIX was very bearish today, closing down minus 2%, but still holding up above that 20 simple moving average. Remember, on the VIX, we did need to see a close above 29.6 to see any real selling, and we never got that. That's why it's so important to watch the VIX level closes, because we weren't getting closes above 29.6. And when the VIX was spiking intraday, that was causing a lot of volatility, but we were closing the day relatively flat and building a base for the bulls. So right now, if the VIX continues to head lower back towards our 23.5 level, that means fear is going to start leaving this market. And when the election is over, we should have a lot less fear and there should be a lot less uncertainty in this market, which means we could go back to grinding higher and we could see price action start going up day after day. So watch the VIX. If it keeps trending down, that's going to be bullish for the stock market. And if it starts trending back up, you still need to see a close above 29.6 to get too bearish. Next up is the sectors. And as we know, these sectors are absolutely driving the market. And the financial sector looking pretty good today, going up 0.32%. Our bullish trend is picking up momentum on the financials. And we see the 5 EMA breaking away and creating separation from the other moving averages. Remember that 20 simple moving average crossed over the 50, which was a bullish sign, and now it's also creating separation from the 50. So the short-term bull trend and the medium-term bull trend are picking up momentum, and we're getting bullish price action. So I'm looking for financials to create a new higher high on the daily chart, and that will be a close above 25.5. So the financials are looking bullish, and as we know, when the financials are bullish, we're going to remain bullish on the S&P 500. Next up is the industrials, and we see the industrials also looking bullish. All of these moving averages have been bullish, and the trend has been bullish. The price action remains bullish as well because we're closing above the 5 EMA. So I'm looking for industrials to continue to head higher as well. And if the financials and the industrials are heading higher, we know the S&P 500 is going to follow suit. Next up is healthcare, and we see the same story with healthcare closing up above the 5 EMA. So we have bullish price action, and all of these moving averages are building momentum to the bull side. So we're getting a strengthening bull trend, and we have a strong bull trend on most of these sectors. So that's going to mean the S&P 500 is going to continue to trend higher. Now remember, technology is still not doing very well. So as soon as technology starts going back up again, the S&P 500 is going to start melting up. Next up is the US dollar, and we see the US dollar still looking like it's strengthening that bearish trend, and I'm looking for the dollar to continue to head lower. Remember, a weak dollar is a strong stock market because a weak dollar is going to cause asset prices to inflate. So the weakening dollar could send the stock market higher, and we could see the stock market bulls start stepping in a big way if this dollar continues to weaken. So if we see the dollar close below 92.28, that's going to be another very bearish sign for the dollar, and you could see we're in that long-term bear trend, and if we break through that floor again, we're going to continue heading lower, and that could be another catalyst to send the stock market much higher. Next up is gold, and gold is back in our consolidation. We never got that break above 1930, but we're getting another attempt at support, and we're still trading right on that 20 simple moving average. So you can see the 20 simple moving average is sloping upward, which tells us that the bullish trend is building up momentum, even though the price action is still consolidating. So I'm really looking for gold to bounce off of support. We need to get a break above 1930, and if we can get a test of 1930 and a bounce, this will be a good time to start loading up on gold because we're likely going to go into a strong bull market. But right now, I would be patient and I would watch and I would wait just a little longer to get that confirmation bounce because it's equally likely that gold can start breaking down to the downside. So let's be patient on gold and let's wait and watch and see if we can get that break and close above 1930. Just a quick update on silver. It's still struggling to break out above 25, and the same thing with silver. Let's wait and watch and see if we can get a break of 25 and a bounce off of support, and then we could be a buyer of silver off of that test of support and that confirmation bounce. Next up is Apple, our market moving stock, and Apple did find support at the 50 EMA and our support trend line today, and it's holding up right around that 0.5 Fibonacci retracement level of $114. Now the Apple bulls need to start stepping in soon because you can see we're building up a short-term bear trend because that 5 EMA is now crossed below the 13 and the 20 simple moving average. So we do have a short-term bear trend, but we do have the benefit of a medium-term bull trend because that 20 simple moving average is still sloping upward. So the Apple bulls need to start stepping in soon and drive the price higher to save Apple from going into a bear market. If we start closing below the 50 EMA, and we start closing below the support trend line, that will be bad news for the Apple bulls. But there is a catalyst coming up on earnings on 10/29, and usually when we're going into earnings and we're going down, it's more likely that we're going to see upbeat news and a price action bust to the upside. So this could be good that Apple's going into earnings with weak price action because we could come out of earnings with another strong bull market. Next up is Tesla, and the Tesla bulls are definitely in trouble because we're getting closes below the 20 simple moving average and we're getting that short-term bear trend. Now the medium-term trend is still somewhat bullish, but we're closing below the 20 simple moving average and the support trend line. Now we did look like we found support above the 0.5 Fibonacci retracement right around $409, but it's not looking great for Tesla just yet, especially because we already had earnings. There's not a lot of catalysts coming up for Tesla. So Tesla bulls need to start stepping in soon or this chart is going to start looking bearish and we could start heading down into a downtrend on Tesla. Next up is Bitcoin, and the Bitcoin bulls still fully in control, and we were getting a little overextended above the Bollinger Band, and it looks like we're starting to get some consolidation right around the $12,900 level. We're starting to see volume cool off a little bit, but we did have a huge spike of volume on a bullish price action. So it could be just we're looking for a little bit of consolidation on Bitcoin right around this level, and we could start heading up to our next leg higher to our price target of $14,000. So going back to the S&P 500, if we go to a 1 hour chart, you can see we definitely did get a close above our resistance trend line today, and on the 1 hour chart, we're starting to get some bullish price action and some bullish trending building up. Back to the daily chart, you can see the same exact thing. And we see all of the sectors in the stock market, from the industrials, the financials, and the healthcare sector, looking very bullish. So it's really only the tech sector that's looking weak right now. And going into the big tech earnings, we could see positive upbeat news and we could see tech start joining in on the fun. The S&P 500 could really start going up in a big way very soon. And there's a lot of catalysts coming up after the election that could send us back into a smooth sailing, grinding higher uptrend. Now watch out for these upside price targets of 350. We're going to have critical resistance, but don't be too scared of those resistance levels, because if the bulls are able to break them, we could turn those resistance levels into support levels. So we don't want to speculate too much on what's going to happen. We just want to follow the price action and follow the trend, and we want to stay objective. So right now we're bullish because the price action and the trend are bullish, and we want to follow the trend because the trend is our friend. If we're following the bullish trend and we're buying off support, we're likely going to make a lot more money than the people who are trying to time a top and trying to short the market. If you're shorting this market right now, you're playing with fire because this market still has a lot of room to run to the upside. So have a great weekend, everybody. Please remember to smash that like button to help me out. I really hope these videos are helping you out. And if you haven't already, go ahead and subscribe to my channel so you can follow along with all of my updates. Good luck out there, everybody. Thanks for watching. Have a great weekend. And as always, I will see you in the next episode.